All right, hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. I hope you're doing well out there. It was another very busy week. Not a ton of different news flow, but certainly lots of yo-yoing with the geopolitical side of things, with Greenland, with Davos speech and tariffs. So plenty to talk about. And of course, for next week, earnings season is heating up. So we're going to look at some of the mega cap companies that are reporting, and then some of the spread and individual sectors and stocks that have been leading. As everybody knows, our video is sponsored by Investors Business Daily. Check out the links in the description of the show. Get yourself some discounts. They are releasing a new market surge platform. Not sure if everybody has access yet. It is in beta. I've been playing around with it. Nice added, much needed functionality to kind of bring it up to speed and make it a lot more flexible. So check out that discount in the description of the show once you get done. Now, front and center here has to be really the sell-off, the aggressive Sunday night future sell-off into Monday, and then the complete turnaround here, the taco trade as it is, after sort of tariffs getting called off on Europe, or these new tariffs over this Greenland sort of framework that President Trump is trying to chisel out, trying to get mineral rights, trying to get more defense sort of out there, and it seems like the market is happy so far. We of course don't have many details, but it was at least enough to really cause the market to panic that the president might be using force, might be really trying to stick it to NATO allies. And then as the week went on, we started to get that softening, backpedaling of the negotiations. So this caused a lot of really sort of, initial rug pulls and then quick bids back up in lots of charts, which we're going to look at a little bit later. Next week, we also have the Fed, and they are meeting for their FOMC. The market is not expecting any change in their interest rate policy, but we are certainly going to be, looking at their expectations for future meetings here. This is on Wednesday, and you can see again, really no expected 97% chance of keeping things as they are. This week, we got to talk about gold once again. So gold is not a new thesis. Of course, we've been talking about this all last year, and gold just had one of its best weeks really in many years, or certainly in the top decile. I should have ran the study beforehand, but you can see getting quite vertical here, and this is obviously adding to gains in a trend that is already, pretty extended on multiple time frames. Now, I'm going to brag a little bit here on our Galahad trading system, but we were able to ring the register a bit this week on this is a long-term hold, right? So gold is both a strategic position and a core position, or I guess to say it another way, there's a dynamic overlay that we run on gold, but then there's also this core holding of gold in our long-term all-weather model here. And so we got involved in gold with IAU. This was back in 2024. And again, we sold a piece of it here today for 137% gain. And you can see all these peaks here where we tend to, sort of rebalance and take some off the table. And it tends to be on these vertical ascent points. And generally, they do kind of follow a little bit of a consolidation. We shall see. We're still very long gold, but taking some profits here. Silver also having a monster move, again, trading at all-time highs again, and really just, the metals trade, the scarcity trade, real, kind of industrial metals or commodities are hot. This is not new, but they are extending here. International stocks also, right? Not a new trend, but continuing to make new highs here. So the ACWX, this strips out the United States and it looks at all other countries' performance. And you can see we got new highs here again, and emerging markets, right? More highs here again in the emerging markets ETF. So like we've talked about here, there is plenty working in the market outside of the S&P 500. So here was the performance this week. Again, if we look at the S&P 500, it was actually down this week, certainly recovered off of the lows, but basically flat to slightly down. So was the Dow and the Russell. If you look at commodities here, gold up 8.7% and oil catching a bit of a bid here as well. Here's the S&P 500. So once again, we had, again, a short week here. So markets were closed on Monday, and we had that ugly gap down and a start at basically the bottom. If we look here on the right-hand side, you can see this was a pretty good puke of a session here, and it certainly, made it feel like this could be the breakaway gap to the downside. And the market is getting so good at putting in these horrid looking technical capitulative sort of moves downward that look like a thrust off the old trend. You're gonna get the real pullback now, and it just doesn't happen. People get hedged up, right? People take stops, they take exposure down very quick, the worry comes in, and then this market just floats higher. You could say it's that, or you could say it is, an administration that is keenly aware of the impact they are having on the market, and they are, sort of being a bit of a puppet master here. I think both things can be true. This is the NASDAQ 100, like we talked about last week, right? We've got this very clear level to work with, 630, right? It is repeatedly acted as resistance now, going back 3 or 4 months. And this is becoming increasingly meaningful here because the NASDAQ 100 is stagnating. It's in a holding pattern. And my suspicion is we're going to get a glimpse of it next week, where we have some of those mega cap earnings that are starting to come out. And I think that is going to really either make everybody say, oh, okay, it's time to rotate back in and play for a catch-up trade in the mega caps, or it's going to accelerate the rotation out of it. One way or the other, I think it's going to be an important earnings season here, specifically for the Mag 7, given the fact that we have compressed here, right? Given the fact that we have gone nowhere now for months, I think this pattern is just becoming a little bit of kind of a, just a kettle that is ready to either boil over or release some steam here. And again, like we talked about with the S&P 500, we had a very ugly open to the week. It looked like this would be the breakaway kind of drop here for a bigger correction, and it just did not manifest. We find ourselves right back up into this, old, kind of sideways levels. The VIX also, again, spiking north of 20 and now trading about 16 going into a busy earnings week. Dollar really got hammered here on Friday. So this is quite a big move here, and quite honestly, I don't know if I'm missing the mark on what else is explaining this. I don't know if it's just a Fed expectations and interest rates here, or if there was something else going on. To be perfectly honest, I need to do a little more digging on that this weekend to see what made such, again, it's a heavily Euro skewed index, but it is a meaningful move there. 10-year Treasury yield did float lower this week, so that's good. We talked last week about the breakout over 4.2. We're still holding over 4.2. And again, if this turns into some type of, continuation pattern, then that's going to put some pressure on equities in really the wrong way that the administration wants to see interest rates go. So we're going to want to pay attention here, but it was nice to see no immediate follow through. If we take a look at sectors this week, energy, materials, communication services, they're at the top of the list. Financials continue to get hit, real estate, and so are utilities. We can see we got 5 sectors here that we're still bullish, trend positive, momentum positive on, based on our smart trend filter indicator. This is available for TC2000 and TradingView. We've got 5 sectors kind of chopping around sideways, kind of indecisive. There's some good, there's some bad, kind of saying that pay attention and let's see which way those resolve. And it's really just financials now standing alone with an active sell signal for us. Now, energy, like we talked about, top of the performance list this week, but notably here, going back multiple months, going back multiple years, we're starting to break out. We're starting to catch some momentum. I was, really sort of trying to get into this trade, admittedly, just a little bit too early here, about a month or so ago or a few weeks ago, and it just kept on, causing some false starts. Luckily, I do still have a position here. I had to continue to kind of take it down, then I brought it back up, then I took it down. So I was, getting a little chopped up in terms of managing a position, but fortunately, I'm still long XLE. It is working here, and, a lot of really the details that are trying to come out of the Venezuelan investment and what's going to happen there with all of the, supply and drilling of oil is, front and center. Now, sector performance year to date, I wanted to include this because once again, I want to just illustrate here that it is not technology, right? Technology on the year, right? Year to date, I know is funny. It's only 3 weeks in, but technology can largely be, attributed to maybe these two here sectors. And you can see that when we look at this, it's materials, it's energy, and it's staples and, industrials. Those are really your big four. And of course, we've seen that really in the performance of the small caps, the Russell 2000, and sort of the more average stock, right? Not the just big heavyweights. And I think it's meaningful because these are the early trends and we want to pay attention to it, because if we find ourselves at the end of the year and we say, wow, how did materials, finish up 40%? Well, they had the initial start. They were, telling you a little bit of a message here early on. Same with energy breaking out. So this is why we pay attention to these things. If we take a look under the hood at the 52-week highs and lows list, it continues to look good here for support of U.S. stocks or support for the average stock. There is, more hitting 52-week highs here. This is starting to be the most expansive move that we've seen in quite some time. We generally should expect that when we do have the Russell 2000 and all of these other sectors that are performing, but we're still just getting confirmation and check boxes when we go through all of our different views. Put to call ratio getting a little bit complacent here coming in. This was as of Thursday, so it is noticeable that we are starting to get, and again, this is the put to call ratio on equities, and it is noticeable though that we are getting to a pretty complacent level here coming into a busier week next week with earnings. Now, Bitcoin is still doing Bitcoin type things. Last week, we started to upgrade our outlook on it, just at least to say, hey, it's getting its act together. It was holding above 94K. I'm not longer term or intermediate term bullish on it per se, but I do think there's a tradable move. Well, that certainly fell out this week with the break back below 94K, back below into this range. We're sort of magnetized back to 90K. So this is still a very tricky market here. It is seemingly still easy to kind of push this market around, it seems, and it's a very just mean reversion market, and you're getting kind of these, good 30-minute trends, 4-hour trends, and then they sort of fizzle out and they mean revert hard in the other direction. So for now, there's a lot of supply starting to build here. 90K, we're compressing, and there is going to be an expansionary move here, but we might need to wait just a little bit longer. So Bitcoin is still a tricky spot to play. Like I talked about last week, I did trade the short-term pop, and then I started to sell puts, and that's still pretty much the plan. I still have exposure here. I'm not necessarily seeing or thinking there's going to be an immediate breakdown. I still want to be kind of glass half full, but I think you have to be tactical if you're in this spot. I think that's just, I guess, what I'll say about it. All of our longer term, medium term models, they're not engaged here. This is more tactical trading. Next week, in terms of econ, I think FOMC is the big one. We will see some GDP growth rates coming out as well, and the producer price index that I think we should pay attention to on Friday. Now, looking ahead to next week, just to talk about some of the heavyweights that we have reporting earnings, I think Meta is Wednesday. Meta has certainly been trading a little bit in its own sort of universe here. It's a kind of a messy, damaged chart, to say the least. This is going back to May, so about a 6-month run here. And you can see there's not much trend. There's a big, ugly open gap here. So I think depending on how the stock acts on this earnings report. You could start to get in here on a gap fill. You're trying to see this higher low hold. And, really, I think we're going to be judging Meta on its CapEx expenditures, ROI insights to see if any of this is paying off yet, and just how much capital are they burning, right? If you want to see the extreme example, and again, a totally different company, but look at an Oracle that the market has severely punished, right? 50% or so drawdown. These companies are not the same, but they are both spending aggressively to position here. And so how the market handles these numbers, but more importantly, the guidance and the plans is really what I think is going to be key here. Tesla also reports earnings this week on Wednesday. I do have a position here in Tesla. I do like the overall structure that's getting built out. I do like the recovery this week where we did break down, we broke support. It looked ugly again on Monday. And then we saw some good relative strength start to really creep in here for the rest of the week. So Tesla, again, numbers out on Wednesday. The numbers are probably going to be relatively disappointing from the pure auto side of things. I think that's kind of whisper expectations, but of course it's really just going to be the autonomous driving timelines, the energy, makeup or revenue growth really, and then also just Optimus, right, on the timeline there and when they can get things going. So a lot of kind of future planning that I think we're going to be, looking for Elon Musk to hype up the nations. From a technical perspective, I mean, it is probably a relatively attractive in the sense of you're getting a nice pullback here and a nice kind of discount to the trend. I don't fully understand the catalysts here for Apple. I would expect lots of folks are just going to be looking at the iPhone 17 cycle numbers, growth, Siri, some of the services, what's the AI powered Siri, Google sort of partnership thing going to look like. I think that's what might excite the market. But right now this story feels a little stale, but you are getting a bit of a discount here after pulling back some. So those are your big heavyweights. And again, I do think given where the Qs are, this is going to be meaningful as to the first quarter real direction here in the stock market. A couple of names from, actually, I think I only brought one this week, is Iron. So this is a current quant rocket momentum name. We had a trade in this earlier in 2025. We risk managed, sort of sold, exited the position. I don't remember exactly, but somewhere in here. And now our model is back involved at more or less the same price, but it now has more confidence that, hey, the bottom is, durable enough to get back into the pool. And so we got back involved at around 45.50. We do have a position in this right along with our Rockets model. And the reason I'm highlighting it today is because it is kind of flagging out here nicely. The range is expanded this week, right? There was a good shake here on lots of these stocks. They're volatile by nature, but I do like the potential continuation pattern that's forming here. And it looks like you could target back to these $75 highs to get a retest and see how the market feels about these prior levels. Another name kind of similar in the space here is Applied Digital. Now, we don't have a position here. This isn't on our Rockets model right now. It's a shame. It does look good and it feels like it fits lots of the candidates. So I might have to do some homework and figure out why this isn't meeting some of the qualifications. But I really like the structure here on this name. I don't own it. I probably will own it, but it formed a real nice kind of, continuation pattern here, kind of carved out some support. Take a look at the dollar volume that came in, and then take a look at the fact that it's trying to jump here on Friday. I really like the setup on APLD, and so it's something I might get involved in. So that is it. I think next week we got earnings. I think the Qs, either rotation or catch-up trade, will be the most interesting. You have a clear out in the Qs if it does get its act together and the market says, we need to start to reprice these. Otherwise, I think let's pay attention to the Fed. Let's continue to play the expansion and breadth in a lot of these individual stocks. I know our momentum dashboard is filled with individual names, and so there seems to be really a lot to pick from and choose from right now compared to really any other time in the recent few years, frankly. So that is it. Thanks as always for tuning in. Hope to see you back here next week. We got links in the description of the show to our sponsor IBD, to our Rockets momentum system, and our Galahad trading system. Check those out if you need a little bit more, and we'll see you back here in the next episode.